Hello, ladies and gentlemen. Today is September 1st. Happy Labor Day to all the hardworking people in this country. With the massive inflation problem we're facing, this is the recap of the stock market from last week and the outlook for the week ahead. We'll discuss the latest news and most recent data you need to know, along with the key levels for the market. If you enjoy trading like we do, please make sure to like and subscribe. Let's get into the news. When analysts compare today's market to the late 90s rally, it's usually a warning. But Julian Emanuel, chief equity and quantitative strategist at Evercore ISI, sees it as a major opportunity. He argues that just like the internet boom, today's AI revolution is lifting stocks, valuations, and society to new highs. Unlike the dot-com era, this bull market has seen broad participation across sectors, not just tech. Utilities powering AI data centers and industrials driving the global build-out are also leading. Emanuel believes AI is even bigger than the internet, already touching every part of society in just a few years. Evercore expects this bull market to last through 2026 and push the S&P 500 much higher. September has a long history of being the toughest month for U.S. stocks. Seasonal weakness and post-summer volatility often weigh on markets. And this year, uncertainty is heightened by a key jobs report and the prospect of a Fed rate cut. Since 1897, the Dow has averaged a 1.1% drop in September, finishing higher just 42% of the time. The S&P 500 and NASDAQ show similar trends, with average declines of 1.1% and 0.9%, making September historically the worst month for stocks. U.S. stock futures were flat Monday, while gold hit a record $3,578 an ounce, and silver reached its highest level this year. Both metals are up more than 35% year-to-date as investors seek safe havens amid concerns over Fed independence, Trump's tariffs, and expectations of rate cuts. Bitcoin bounced back above $109,000, crude oil rose 1.5%, and the dollar edged slightly higher. Legal battles over Trump's firing of Fed Governor Lisa Cook and his global tariffs add further uncertainty. Markets now await the Fed's next meeting, with September shaping up as a critical month. Analysts warn a 5 to 10% pullback is possible before a recovery into year-end. Morgan Stanley expects the Fed could cut rates more aggressively than markets anticipate. Their baseline sees 25 BP cuts at each meeting through December 2026, but alternative scenarios point to an even lower path, with the Fed funds rate potentially dropping as low as 2.25%, before settling near 2.75%. The bank argues Powell's Jackson Hole speech signaled a shift toward prioritizing labor softness over inflation, reinforcing a dovish outlook. They recommend long positions in 5-year notes, the long bond, steepening trades, and January 2026 Fed funds futures. Morgan Stanley assigns probabilities to 3 scenarios: stronger demand from fiscal push, 10%, higher inflation tolerance, 10%, and a mild recession from trade shocks, 30%. Overall, they see Fed funds pricing possibly 100 basis points below the market's assumed 3.25% terminal rate. Now let's expand the conversation and see some data. I want to show you guys. We begin with markets are entering a historically difficult stretch. Since 1927, in the first year of the U.S. presidential cycle, the S&P 500 has dropped 58% of the time in September, averaging a negative 1.62% return, the second worst month on record. October hasn't fared much better, with an average return of negative 0.58%. Since 1950, September has been the weakest month overall, posting gains in only 3 out of 18 post-election years. History suggests volatility lies ahead. Global equity market sentiment is at euphoric levels. BofA's Global Equity Risk Love Indicator jumped to 1.4, its highest in 13 months. This gauge tracks investors' positioning, put-call ratios, investor surveys, price technicals, and volatility. This metric has surged from panic levels to euphoria in just 4 months. Since 1987, sentiment has only been higher 7% of the time. These periods include the pre-pandemic rally and the post-pandemic recovery. Market sentiment is through the roof. China's housing slump is worsening. New home sales from the country's 100 largest developers fell 17.6% year-over-year in August to 207 billion yuan, among the lowest on record. That follows a 24% drop in July and marks the sixth straight monthly decline. The downturn has now dragged on for over 4 years, despite Beijing rolling out heavy stimulus over the past year. Demand for new homes in Chinese cities remains roughly 75% below its 2017 peak. China's 2008 moment may already be unfolding. According to the Kobayashi letter, 74% of global central banks cut rates in 2024, the highest share since 2021. In May 2025 alone, central banks cut rates 15 times. Yet, despite this aggressive global easing cycle, bond yields are sitting at 30-plus-year highs. Why? Because deficit spending is spiraling and inflation is back on the rise. In other words, we now have higher interest rates despite rate cuts. The bond market doesn't lie. Let's see what earnings we do have for this week. Here is the most notable earnings for this week, Tuesday. Scalar, Signify Health, Academy Sports Plus Outdoors, NIO. On Wednesday, Salesforce, C3.ai, Cerdo, GitLab, Hewlett-Packard Enterprise, Dollar Tree, Macy's, American Eagle Outfitters, Tilly's, J. Jill, Campbell Soup. On Thursday, Broadcom, DocuSign, Lululemon, Ceramai, Ciena, UiPath. Friday, no earnings. Now let's see some chart in the calendar for this week. As you know, September is not usually a good month for the market, as I've shown with the data. I just want you to be careful this month because a lot of volatility is ahead. I'm expecting another leg down this week to around 639, followed by a bounce. The most important day is Friday, NFP Day, which could shake the market. If we break above 647, we could see 651, but the market rarely goes higher. If August closes green, we might see another all-time high, but a sharp decline is likely afterward. Key events this week. On Tuesday, ISM Manufacturing PMI, Zscaler NIO earnings. And on Wednesday, JOLTS job openings, Fed Beige Book, Salesforce, C3.ai, Dollar Tree, Macy's, American Eagle Outfitters earnings. On Thursday, ADP payrolls, jobless claims, ISM services, PMI, Broadcom, Lululemon earnings. Friday, US jobs report. All right, ladies and gentlemen, that's all for today's video. Thanks for watching. If you have any questions, feel free to drop a comment, and I'll get back to you as soon as I can. Thanks again, and bye for now.